All right, guys. Paul Singh, market speculator with bullsonwallstreet.com. Weekly swing trade report for the week of September 12th, 2022. We're going to talk about 6 different things here. We're going to talk about the market, and it's an improving market. We're going to talk about the inverse relationship with the US dollar. We're going to look at the growth chart, energy chart, 5 stocks, all of them had good earnings reactions and are setting up now, and then a couple of alerts that we are in right now. So let's get started here. The market is, even though this has been volatile, it's actually doing what we want it to do. So we've known for a while here, we've had this topping pattern, and we've been downtrending off the topping pattern, and it's been a classic downtrend. Lower lows, and the bounces, while powerful, made lower highs. And that trend, even though it's very volatile here, has shifted. Notice here, this was a trend of lower lows. This high broke that, even though it's been volatile, and there was a bad reaction to what Powell and the Fed has said recently. We made a higher high, and what's really intriguing here is we also made a higher low. As we can see here, these lows are all higher lows here. So kind of breaking the trend here. We're not out of the woods. If we were to fail here, it would continue down. And if we were to get below, say, this level, we'd break the trend of higher lows. So, but we like where we are right now. We want to see a continuation here. We've had a very strong 3-day bounce here. And what was really encouraging to me was, we've had this big move down, which was basically related to Powell coming out of Jackson Hole and saying, we're going to still be aggressive with raising rates. We're going to really fight inflation. And that is not what the expectation was when we had this very strong bounce. But what was interesting is that the market seems to think that this is priced in now, because last week on this day here, which was Wednesday, I believe, Powell reiterated what he said here when we had the big move down. And then the next 2 days, more Fed chairs came out and essentially said the same thing. And on those days, the market actually bounced instead of panicking. It's like, okay, we know it now. We've priced it in. We know how to deal with it now. And it looks like we are ignoring that for now. So now that we have Powell out of the way, he was expected to speak last week. We have a couple of weeks here until the actual rate day. We'll call it it's Fed day, but we'll call it the interest rate day. We have 2 weeks. And in that 2 weeks, let's see what the market does here, and then, of course, how it reacts. But in the meantime, this is the spot where we can take some quick trades here, which we've been doing, knowing there's no big news events unless something came out of nowhere, and we've got a couple of weeks till the Fed speaks again. And unless they did something super surprising outside of what they've been saying now, maybe the market thinks it's 75 basis points. If it came out to 100, maybe then the market would panic. But for now, things are looking pretty good. Again, the pattern is there for potential next leg higher here. And in terms of market breadth, RSP, we always keep track of the equal weighted ETF. We know SPY is not equally weighted. Apple is the most valuable stock within SPY. It's 2 or 3%. If you took all 500 stocks, it should be 0.2% each. But you can see here, the equal weighted is actually even a little stronger than SPY is itself. So that's good in terms of market breadth. The T2108 indicator, which measures stocks above their 40-day moving averages, got the wrong one here. T2108, there we go. You can see here, while it pulled back very hard, has been a nice 3-day move, and it looks like it's ready to challenge its highs, or on its way towards its highs again. So we've got some good market breadth readings. There's some other ones we look at that we won't go over now, but we are seeing improvement in that after that deep pullback here. If we look at the Qs, pretty much the same thing in IWM. The Russell small caps are reacting well as well. So market looking pretty good unless we see something that changes that this week. We are going to have a slightly bullish outlook for now. Very short term, and that could switch very quickly. Now, also, keep in mind we've had an inverse relationship with the US dollar recently. Let's look at the ETF UUP. You can see here, first, let's look at SPY and notice where the bounces and dips are recently. You can see the kind of May to June decline, the June to August run up, and then the August here, meltdown, and then a little bounce here. And you're going to see the complete opposite with the dollar here. And I'm having a little issue here, bringing this up. There we go. You see the exact kind of inverse relationship, and where SPY was going down here, we saw the dollar going up, and more recently, SPY has popped and the dollar has pulled back. We want to continue to see the dollar pull back here. That'd be very good for the market. I know it sounds counterintuitive, though we want a strong dollar. It actually it lessens the value of our exports. So big companies don't really like that. So we want to see a pullback here. That will be healthy right now for the market. There's not always an inverse relationship, but right now we've seen an inverse relationship between the dollar and the market. So pay attention to that as well. You can use that almost as a breadth indicator or an inverse kind of breadth indicator. All right, now let's look at growth. Growth was really strong here, and we saw these bottom formations forming. You can look at IGV, which is software, a lot of growth stocks in software, obviously. We saw this bottom formation, and we saw this breakout and a really hard pullback, almost looked like a meltdown here and kind of almost invalidating this bottom formation, but we're seeing strength here. And if we continue higher, this could be a higher low here, and we already got the higher high. We can also look at the speculative ARK ETF, and we're seeing something very similar here. And we can look at something like semiconductors here, and we're seeing something similar in that as well. So pay attention to growth. If the market really does start to run here, these things should really pop. And then energy, obviously we're paying attention to energy here. And you can see the pattern, it's been very volatile recently, but this does look kind of like a cup and handle here and ready to break out and maybe make a run to highs here. So we're watching energy very closely as well. We've got a basket of energy stocks that we really like in here that we're paying attention to for potential entries. Then we've also been paying attention to stocks we like post earnings. These are stocks that had good reactions to earnings breakouts, maybe some good news, some good guidance, whatever it is. And they are setting up for potential trades here. Let's take a look at CellH, AXTI, Disney, Yelp, and Netflix. So CellH here, this was on fire even before its earnings. But you can see here, it had the earnings breakout, tested the low here while the market was pulling back, and has held up well. And you can see here, there is this monster kind of consolidation here that's gone on over a year, and now it is basically testing its old high. And you can see when it did that here, it led to and this is a very common pattern where you make a high, consolidates for a long time, and then the next breakout leads to a huge run. We saw that here back in 2020, and you can see how far it ran here. We saw it again later in 2020, and you can see here it ran from 27 to 70. We saw it here to a lesser degree when it consolidated for a while and went from 66 to 111. So all of these consolidations and breakouts led to really big runs, and we're seeing that setting up again. I wouldn't surprise us to see this thing run to 150, 160, 170. So CellH, and this is also post very good earnings, so it has good news as well. So CellH is setting up very nicely. Let's go through these other ones really quickly. AXTI, semiconductors here, earnings breakout, tested the low and is bouncing now. Looks very strong here. We have Disney, which had been really beaten down and then had this nice earnings breakout, tested the 50-day moving average, remounted the 9 EMA, looks ready to test that 200-day moving average. A similar pattern in Yelp, big earnings breakout. We got the pullback, held at a key level, the 200-day moving average, and now is consolidating and bouncing, remounting the 9 EMA. Could test the high here around 40 and is sitting at 35 right now. Finally, Netflix, another beaten down stock that had a good earnings reaction, tested its gap fill right here, pulled back kind of this big cup and handle here, and looks ready to run. And we could target here the gap fill here around 334, and it's sitting at 234. That's a good 100 points here in this kind of gap range here. So nice setup here in Netflix as well. We have a bunch of stocks we're watching that are setting up like these, but these are 5 really good ones. And we are in PanW and DraftKings here. You can see PanW here. We did this very similar. You can see this. Yelp was putting in the same pattern, tested the 200-day moving average. We got in on this day here. You can see it's sitting at 564. We're targeting the top of the range, but may even go for a bigger breakout here. And then DraftKings, you can see here, earnings breakout pullback, showed support at the 50-day moving average and is now bouncing. So that's where we're at right now. Some good stocks to watch. Potentially could be a strong week here. Things are setting up nicely in the market. And if you guys want more, you can join us at Bulls on Wall Street. For what I run, the swing trading report, that's under part-time trading here. And we have the swing service. All right. And I'll probably do a stocks and coffee next Saturday. So if you're not a member of the swing report, you can still see me next Saturday. Talk soon, guys.